How's it going, everybody? It is Dennis, and we're back with another video. The markets are down, tariffs are coming in, there's probably a recession, who knows what's going on. But of course, in times like this, we have to think about restructuring our portfolios, choosing which ETFs we want to stick into, and seeing which ones are bad, which ones are good, what trades are profitable, what trades are not, and which ones are safe in markets like this, where QQQ is down almost 10%, S&P down 7-8%. What are we choosing? What are we playing? And of course, as you can see on my screen, we have SGOV, boring old bonds. But before you click off the video, because there's bonds on the screen and the yield's only 4.2% or whatever, don't click off just yet. There's more to it. I'm going to explain how I'm using SGOV to have cash sitting in my account for moments like this where the market goes down, and for future moments in case the market continues to go down, to go ahead and have cash that doesn't lose value, gets returns as well in interest. Of course, on SGOV you get 4.295% return, right? Currently 3-month treasury yield is 4.295%, so you're getting 4.295% return on your cash, but then you're also using margin, which we're gonna get to in a second. But of course, this video is just going over SGOV, how I'm using it in my account, and how maybe you guys can use it in your account if you find this video interesting or some kind of way knowledgeable. So SGOV, currently SGOV, as you guys may or may not know, I never talk about a stock that I do not own myself, or an ETF or whatsoever. So SGOV, I currently have only $504 in it. That is because I'm just currently starting to open this position. I'm building slowly into it. As you can see, I have $3,666 on the side. As you guys may or may not know, I'm saving cash currently to go ahead and open up a new position in S&P 500 or SPYI, so I could continue to trade poor man covered call strategy and increase my income by $400 a month every 3 to 4 months. But besides the point, that's not what we're talking about. We're talking about SGOV. So currently I do have $504 invested into it. Around 5 shares, since each share is $100, and is yielding me 4.295% roughly. Or if we take a look at the dividend yield for the year, on average is 4.9%. But of course, it's going lower and lower since interest rate cuts were cut recently, with the two basis point cut that we had a couple months ago. So besides the point, how am I using SGOV? Well, first of all, SGOV is my new savings account. It's my new savings account. I've decided that what's the point of keeping my money in a savings account such as SoFi, which is actually, if you guys do or do not know, is one of the most competitive savings account out there at 3.8%. The one I have is not SoFi. I have a different bank, and that one offers roughly 3.25%. I, in general, don't believe in keeping money in savings account, but of course you want to have an emergency fund, and having emergency funds are important, but other people could talk about that. That's not me. I only talk about high yield, high return stuff. But as always, you know, it's great to have an emergency fund. But besides the point, SGOV is my new savings account. I am throwing cash in there that I have to throw in. Any extra cash I throw in there. Say I'm making income from YouTube, from these videos, I throw it into SGOV. Say I have income lying around from my 9 to 5, I throw it in there. And I'm just building my position SGOV. With that, I'm not only yielding 4.295%, okay? That's not what I'm yielding with SGOV. I'm yielding a lot more because what I'm using with SGOV is margin. Of course, since SGOV is technically equity that you could buy on Robinhood, Fidelity, any single platform you have, on these shares, on this money, I could take out margin. And that is what I'm doing. But of course, I'm not only taking out margin and putting it back into SGOV, which technically would be the safest option if you're trying to use this as a savings account. SGOV, as you can see on the 1 year, it does not lose value. There's no NAV erosion. It goes up when you're earning of course, your interest. They pay out your interest and it resets. You get your interest, it resets. You pay your interest, resets. It stays around the $100 mark. You don't really lose any of your value. It stays the same. So it's a really great thing to have as, of course, a hold of value or a savings account. Because you're never going to be stressed about taking out money and being in a loss in any scenario like that. So it holds its value. It pays a decent dividend, 4.9%, higher than what you're getting for your savings account. But of course, interest rates for Robinhood is 5.25% or 5.5%. So you're not beating the interest rate that Robinhood currently has. So if you're taking a margin, it's not really good for you because you're only getting 4.295%. And you're not beating 5.25%. So how am I taking margin out on SGOV? and earning a profitable enough income to beat the interest I'm getting. And that's not noting the fact that there's also Fidelity and other brokers that have like 12% and 11% margin rates, which is absolutely insane. But of course, you could talk those down. You could contact your broker and see if you could talk those rates down. But mine currently, luckily for Robinhood, is 5.25% or 5.5%. So I don't have that much that I have to beat. But of course, how am I using SGOV and how am I using margin to boost my income that I'm already, or how am I boosting the income that I have or earning with the cash I'm setting aside? So currently I have, like I said before, $500 in SGOV. That $500, I took 50% of its value out in margin. That's roughly $250. Those $250 I threw into JEPQ and SPYI. Now, if you're trying to hold your value, like as in the $250 you took out, because remember, if you have something, you have a situation where you want to buy some stock for cheap when the market goes down as it has right now, and because that's what I'm doing myself, say the market goes down, you want to buy some stock for cheap, you have to sell out of your position from SGOV. To sell out of your position from SGOV, you also have to sell what you have in margin, unless of course you're just buying another stock and it has the same amount of maintenance requirement. With SGOV, the maintenance requirement is 25%. So if you're buying something else with 25% maintenance requirement, then you're all good to go. You can just buy that other stock and you don't have to sell whatever you have in, say you have SPYI in margin, you don't have to sell it. But say you're taking out the cash from your portfolio, I want to have that $100 in cash, I have an emergency I need to attend to, I need to sell this in margin. Therefore, having SPYI, having JEPQ, having GPIX, having any of these funds, or even if you throw into YMAX or YMAG or any of these high yield funds, you put on a risk with that margin due to value loss or NAV erosion. Of course, that NAV erosion could be beat with dividends over time, but in general, you are taking on risk when you're putting in NAV loss or erosion. As you can see in SPYI, in the past month, we lost 6.9%. That's not something you want to see when you need to pull the $500 out, but you have 6.9% loss on the margin you took out, right? But anyways, I don't, luckily, I don't have any emergencies. I don't believe in the future I will have an emergency that I need to take out $500 out for. And even then, I do have money coming in constantly every single week and month. So in any case, I could just use that instead. But say, because of that situation, I can invest into SPYI. How does this boost my yield? Well, like I said before, say I have $500, I take out $250, and now I take that $250, I throw into SPYI. I'm now earning 12.62% on SPYI. So technically, on the $500 that I have invested in SGOV, I just boosted my income by what? Almost 6.7-ish percentage. If you go ahead and ratio it into the $500, right? I think that's how the math works. I hope that I'm do correct on that. But around 6-7% you are now earning on the extra $500 that you have, or on the $250. So you're earning 12.62%. And of course, on that 500, that's roughly like 6% you're earning. Not to mention the fact that also on the 1 year you do have growth. Of course, now we had a market downturn, but we did have growth on the 1 year. I think it was roughly, I don't know if I could show you this, but I think it was roughly around, actually, let me see if I could show you on this screen. I want to go ahead and show you guys. Yeah, if we take a look at the 1 year, we could see that SPYI was actually up 5.09% on the 1 year. So not only are you earning dividends, you're also earning some kind of value growth. But of course, in the market downturn, you're going to have tough times. But even then, if you're buying in right now cheap, you're going to have some growth as well on the upside with that. So I'm buying into SPYI, or I bought into SPYI with the SGOV margin that I took out. I bought into JEPQ. And I'm going to continue buying into SPYI and JEPQ with any money that I get into SGOV. So SGOV cash will be sitting there. I will have it for any red days where I want to purchase some stock, or I want to purchase some ETFs, or take some trades, or maybe I want to take it out and pay for something, pay for some bills. But I also have margin earning me income. So I have safe cash parked in SGOV earning me 4% roughly on the yield, and then I have SPYI, the margin on that SGOV, earning me 12% from SPYI, or earning me 10% from JEPQ. Or if you want to go into a or a Goldman Sachs fund, you could go into GPIX, which earns you 8.72%, or the new Niels fund, the real estate fund. If you want to get into real estate, they have IYRI, which I'm pretty sure is yielding around 10-11% year to on an annual. Of course, it's a new fund, so this one's not averaging in a year just yet on the stock analysis website. But as you can see, they're paying 50.09 or 59, so they're yielding around 10 to 11% on the real estate fund. So that's how I'm playing currently SGOV. I know it's a lot of information I was tossing in, sorry about that. But SGOV is something I'm continuing to put cash into. Like I said, from any YouTube income I'm getting, I'm throwing into SGOV. On that, I didn't take out margin. I throw into SPYI, into JEPQ. That earns me an extra 12 to 10% on that margin income, on that margin I took out. And of course, SGOV also earns me roughly 4.2% currently at the interest rates we have. And of course, I also have cash there. So say in a case where I want to purchase some stock when it goes down, or some ETFs when they go down, I could sell off my SGOV. I could buy something with similar maintenance requirement of 25%, say YMAX, say S&P, or maybe more SPYI. I could do that as well, because SGOV, as you can see, it keeps its value on the 1 year. It stays around the $100 marks. There's no NAV erosion, so there's nothing to be worried about. So that is that. That is how I'm trading SGOV. Just wanted to put this video out there for you guys. Of course, market's been going down. If we take a look at the S&P, let's go ahead and go to SPY. If we take a look at SPY on the 1 month, we can see that we've went down a quite good amount. We've then down to negative 7.2%. At our lowest, we were at negative 9%. QQQ was, I think it was down 12% almost. It's currently sitting around 9 to 10%. So we're staying stable so far. We don't know if we're going to be going down more or not, of course. So like I said, SGOV is looking like a great investment currently if you want to park your cash somewhere. Also, not to mention, if you are a margin trader, I completely forgot to mention this. If you're a margin trader and you have cash sitting around, so as you can see on my account currently, I have $3,666 sitting on my account. That $3,666 is not earning me income. They don't pay you interest for that. Unfortunately, they're not like other provider or other brokers like Fidelity. Fidelity pays you income on your cash even if you have margin taken out. Robinhood does not do that. Robinhood does not pay you because you have margin taken out, and technically that is margined. That is margin cash if you haven't paid back your margin. So that $3,666 is not earning interest that Robinhood offers. So if you are a margin trader like I am, and you have cash sitting in your account and you're not using it currently, or you have maybe you have a 1 month time span that you're not going to be using it, or 2 months time span, why not buy some SGOV? Earn a couple interest points into it, get some interest off of it. It's better than just sitting there in cash and not earning anything at all. Because Robinhood is not gonna pay you interest for it. So park the cash in SGOV while you're waiting to buy into some opportunities, while you're saving up like I am. I have roughly 2 more months to go, or maybe a month and a half to go before I reach my $9,000 goal, so I could buy another contract in S&P. And while I do that, I'm going to park my cash in SGOV. I'm slowly adding into it. The next time they have their dividend payment, I'm going to go ahead and buy in. So when it's at its lowest, I'm going to go ahead and buy in and keep my cash parked in there while I wait for my cash amount to build up. And I could always sell out of it because it keeps its value. It'll pay me 4.2% on a yearly basis, and I could also take margin out on it. Well, technically I can't take, well, I can, yeah, I could take margin out on it because I am taking margin out on the cash. But the cash I currently I can't take margin on. But the future cash I have invested in SGOV, I could take margin out of, throw it into SPYI, earn myself 12% income, or JEPQ, or even start a new position, IYRI, if I want to get into real estate. But I have a lot of real estate funds, so I don't know if I'll be looking to get into that. But we'll see. We'll see how it performs in a couple months. We'll give it until 6 months time to see how it's performing. But SGOV is just in general a great place to park your cash. If you're a margin trader, you're not making interest on your cash that you have in a portfolio because you have margin pending, balance pending, like on Robinhood. Throw into SGOV, get some extra income on that if you're not planning to go ahead and buy anything in the next month or two, if you're saving up for something or if you're waiting for a market downturn. And of course, you could go ahead and borrow on that as well. If you just have cash in general, if you have cash and throwing in SGOV, you could borrow on it and go ahead and buy yourself other funds that earn you higher income. or you could just go ahead and buy it back into SGOV if you have a low interest payment for your broker. I don't know any brokers that are offering below 4.2% interest payments, but if you do have that, lucky you, go ahead and throw it at SGOV and you could outpace what your interest is and earn some extra income on the side if you want to be really, really, really safe. But in general, that is my view on SGOV. That's how I'm trading SGOV. As mentioned, currently I only have $500 into it, but I'm going to be cycling more and more cash into it as we go throughout the months and weeks, while I wait for my cash to build up so I could purchase another option contract in S&P 500 so I could trade some more poor me and covered call strategies to increase my income by $400 a month. So yeah, that is today's video. I know it's a little bit boring. I know 30%, 50% yield, no poor man covered call, 100% return stuff today for this video. Keeping it boring, keeping it simple. Sometimes that's the way to go, especially in markets like this. Sometimes it's good to be boring, good to be simple. I never thought I'll be making a video about bonds. I'm not a bond guy myself. Never really been into bonds. But hey, listen, good place to park your money. Makes you good returns. If you're not, and if you take out margin, you can make even more returns. Of course, a little bit more risk. And just in general, why not have it? Why not have it as a tool in your back pocket to just earn you a little bit of income on the side while you keep your cash on the side to wait to go ahead and buy more positions in a month or 2 or 3 months time. So that has been me. Thank you so much for watching. Hopefully this video was somewhat entertaining or informative, and maybe you guys could go ahead and change up your portfolio as well. Let me know down below in the comments how you guys are changing your portfolio with this market downturn. Are you guys buying more into yield max ETFs or round hill ETFs or neo ETFs or any of these high yielding ETF companies? Are you buying more into it? Are you holding off? Are you just holding the shares you already have? Are you selling? Are you transferring into other strategies? Just let me know down in the comments. I love talking to you guys in the comments. Just spreading information, trying to learn more from you guys and learning from other people, and everybody connects down in the comments. So thanks so much for watching again. Hope you guys like, subscribe, and I'll see you guys next week on Wednesday for the income or the dividends that we're going to be earning for next week from Yield Max and Round Hill. See you guys.